Oh, hello everyone, it's Shooter. Welcome to Primary Wave. Of course, at the end of the presentation, please do review our disclosure. Let's jump right into this. Okay, what we're going to do in this Primary Wave series is we're going to try and show you what's hot and what's not based on the plug and play. So you can project your entries a little more accurately. And basically, we're just going to cover a sector till we're done. Today, we're going to cover the 401k section, which is about 10 names, a little more than that, and then be done. Okay, so starting off, Spider Bloomberg International, BWX. We have a little bit of a bearish look, obviously, with the FOMO we're seeing today. And, obviously, with inflation showing such a perfect number, we got a very significant push off of that. So we're looking at, count says 2189, which is right where we're at. However, I think we could push to the 50-day and maybe to the 8-day. But I don't believe that we put in a higher high from this wave 2 at 2372. I think that holds. So maybe we get to that 50-day, then head lower, maybe towards that 1925. Then we'll find a bottom somewhere around 1896, and then we should have a primary wave set up there. So maybe, mid part next year, it doesn't look like it's an aggressive flat. It looks to me like it's a bottoming plan. So, our trace from here was January of 2023 to July of 2023. So, a good, 7 months, 6-7 months. So I would suspect the soonest we're going to see this bottom is 6 to 7 months as well. So July maybe of 2024 would be my thought pattern. Let's jump over to SPGP, Invesco, S&P 500 GARP ETF. Now, we definitely are bullish here. Breakout lines just overhead, right around 96. Then we look to target 110. So you do want to have a full position on at that point. Now, in any of the 401ks, I've not reviewed the options because that's not really my intent here. My intent is just to show you the count, what's hot, what's not. And then if you have any questions, just jump into chat. And if obviously you're not a member in chat, which you should be to be able to see this, then by all means, sign up, to the rare subscription so you'll be able to see these. Now, jumping over to Invesco Russell's 1000 Dynamo, or maybe Dynamic, one of the two, OMFL, obviously bullish. We got another breakout line here, right about the 8-day, should be about 50.73. Then we're going to head for our intermediate wave 3 around 62. Then we should get a decent back test to maybe 54. But, we could shop around here for a while before we go, because, obviously this took a little while. We put in a high, put in a lower high. That really is not euphoric. So we could be here just as much as we would be with SPGP. So, but we have a good base to build from. So I would target maybe selling 40, 45 puts here if you don't have a position, and go with that. Okay, looking at RWJ, small cap, 600 revenue, looking for maybe 27 on our wave 3 down. Then we get a back test maybe to 33. And then ultimately our target is going to be down around $19. So definitely a bearish look. Now, similarly with ICLN, iShares Global Clean Energy ETF. Now, what I think is weighing on clean energy here, for those of you folks that haven't recognized that yet, is that we have a significant problem with finance right now. Increased rates, higher credit standards, et cetera, et cetera. So rolling over debt is becoming challenging and expensive. So that's going to slow down sectors that are heavy in finance, and clean energy happens to be one of those. So I think that's what we're seeing in the tape here. So we're looking for maybe 1077, which is our intermediate wave 3. Then we got a decent back test, $15. So we've got, we were responsive to the push yesterday and today, but not as euphoric as I would have liked it to be. We are confirming on RSI, so this is like drive 1. So I would suspect that we get, regardless of what this count ultimately prints, at least one more lower low before we find a base. But at this point, we're looking for maybe $5.95 on this. So it does have quite a little bit of downside. All right, looking at soybean, I'd like to say it's positive to the upside, but pretty much our top's going to be in around 29. Now, obviously, we break above the 8-day. Any count can flip. Realize Elliott wave is really only a measurement of buyers and sellers' sentiment. So it measures the euphoria and the fear. So for the FOMO and the FOL, fear of loss, FOMO, fear of missing out. And, then we come up with these patterns which are consistent, because the reality is, if you have 1 million buyers average for a stock, and then they're going to have a certain character. They get nervous at a certain price. They start taking profits at a certain price historically. You can tell by the wicks off in the candles how aggressive they are. And that's what Elliott wave prints ultimately. So it is, I think it's a fantastic measurement of that. But that does not mean that we don't get cash in from the sidelines and we get a pop. So, I think soybean is, another commodity that's dependent on China because obviously they're the largest buyer in the world. So if China starts buying, then, obviously this count could flip and go in the other direction. But at this point, I don't see that happening. I think we come back and at least test the 8-day to the downside. So I would say that 25.48 is very viable. Now, a GLD is actually not on the plug and play, but it is my play for gold because it has the greatest correlation to spot gold. So if you're going to have a position long on gold, this is where you want to have it because right now what's driving gold sales, obviously, is the fear of another financial crisis and the fear of war, and also the inflation that's going on in other countries. They're buying gold as a hedge against what's going on in their own currencies, and that's what we're seeing. So I think our breakout line is, we're going to visit here shortly. We've already turned around, maybe heading towards that 185, and then our intermediate wave 3 is up at 202. So let's look at Vanguard FTSE Pacific ETF. First, we're looking for our intermediate wave 2 around 69.15. Then we should get a decent flush down to the 61. Then obviously a little back test. I got to jump out a little further in time to really try and give you a visual. It just drops off a cliff from there. And we go back down to March 2009 support and a little beyond. So this is showing it's a cycle wave down. So this is whatever's going on in the Pacific, according to the count, is going to be very aggressive to the downside. Now, this is the challenging part about many of the counts that I'm looking at is even though we may be getting these dead cat bounces or these rallies, ultimately that's not going to change the count longer term that we're looking at. So it makes it very challenging for me to pump building a position trade when I'm looking at these type of counts. So keep that in mind. The most I would be interested in doing here is if we get down to trend support, which is this, let me just throw an alert up here, $53, then I might take a shot at putting a position on for a back test of the 200-day, but it's going to be not a position trade. It would be a swing trade that I would be looking. All right, looking at A1A iShares Asia 50 ETS. Supposedly Asia's coming back. Looks good. Counts suggestive. We have a new primary wave. So we do have a weekly trigger on our second primary wave setup. That targets $90 to the upside. This is one I would definitely be building a position on. Maybe sell 55 cash secured puts. You could also, this is aggressive enough where you could buy $60 calls, maybe January, the end of January, February, and those should manifest into some profits. And then you could, of course, either acquire those shares there if you wanted to at that price, or of course take profits. Now looking at EWA iShares Australia ETF, I got a nice push with today. We're up about 22. We overshot our next entry long to the downside a little bit, but it went right to the AD and we're bouncing off of that. So, we do have a weekly trigger, our breakout line. So maybe a full position on by the time we get to 24. I would look at, $18 to $20 puts, cash secured puts. To be very candid, I've not looked if they're even available on this symbol because it's not one that I track, at least on an intimate level. So, obviously, if they're not, then common shares is your only option. But let's take a look at ILF. Now, again, we had a primary wave here. I am losing labels for some reason. I know I put labels on. I don't know where they went. Maybe I didn't save the chart. That's possible. Didn't save it? Yeah, that would help. Okay, so now that I have our primary wave labels back up here, so we're just poking our head back up of our breakout. As long as I'm chatting about the breakout line, just explain my breakout line, how I go. So in my primary wave setup, once the primary wave setup occurs, the conditions are met, then we wait for our trigger, which our first trigger is a 90-minute, then a daily trigger, and a weekly. So we're scaling in, and then our fourth point of entry is the breakout. Now, how I calculate that is I use the weekly trigger, the initial weekly trigger high, which means that would be our breakout line. So we're clearly above the breakout line from the initial trigger, which is here. on our week. So now we should be heading up towards an intermediate wave 3 around 31.47 with a little back test 29.64. Then we head towards our target, maybe about 32.44. All right, let's jump over to Wisdom Tree Emerging Markets, small cap. Actually, let me back up for a second. When I have the Bollinger Bands on the chart, what I'm trying to do is teach you that these labels are secondary and third entry. So when we come back over and I have them on there, what I'm saying is the Bollinger Bands with the fib extensions are broad enough where, we've touched the second standard deviation, which is usually good, which is why I'm recommending a buy. Okay. But we have one more leg lower we could go, and it could be any of these 3 marks, because I come in and I look at the daily Bollinger Bands and then I label them that way. So we have a scatter plot of, how you could scale in. So here on DGS, if you aren't selling puts, I would sell 45 to 40 puts here, then plan on adding maybe down around 43, adding some more around 42, adding some more around 41, of course, till you hit your position size, and if you're not able to do that with cash secured puts, in that scenario, then really your only option is common shares or buying calls. Now, I've become a strong believer in short time frame, like I'm focused on the 6-week window. And the reason is because we have so much rotation that's going on that really nothing is holding up for 90 days. So it's been very challenging to go out in time and put on swings in that area, because when 50% of them start failing because there's no follow through, because rotation took the cash out of the symbol, the play's dead. So we're just back in this flat, chop, and we're not going anywhere. So that's one reason I'm really drilling down to that 6-week time window. Take the premium you can get and then roll. If it's continuing to work, roll into something else. That's really what I suggest here. So with DGS, we're looking for that intermediate wave around 61, with a back test of maybe 55. Now here in this circumstance, our breakout is right here. We're going to have another one that comes up here based on where we are, right here. And then obviously that count should play out from there. HYG, it is really a mess. This, here again, when you start looking at some of the internals, it's actually scary for me, because I understand the implications of what I'm looking. And what I'm looking at is commercial credit dying here. And that's very challenging, because, that is a weight on my shoulders about getting long. And I'm not the only one that agrees with this. Now, granted, we could have one of the largest rallies in the world here with the Fed, basically pausing, saying they're pausing, and coming in and doing quantitative easing. But I think the Fed is more skeptical of the inflation numbers, and we need more data coming in to really support what happened yesterday in CPI, or this morning in CPI. So, but let me jump out to the monthly candles so I can give you a full visual here. We're looking at our primary wave 3 at 54, and then we get a back test there, which is substantial, $15. Actually, it's a nice trade. This is actually a nice trade to the downside. So, any rip to the 8-day is probably sellable on this, or selling some covered calls. This has always been, it's very much like treasuries are for me. It's sometimes it takes a long time to play out. You get this flat and it doesn't really go anywhere, and then it gives it up and puts in another flat, does the same thing. So, once we get that 68 in, I have much more conviction at the March 2000 highs. If the Fed has not started QQE, then, and we continue to see squeezing in the credit market, and we consider to see defaults in the credit markets, specifically commercial real estate, Airbnb financed properties as an example, automotive as an example, that is all going to weigh on this high yield fund to the downside, because there are going to be more people that feel there's too much risk there in defaults, and they're going to start pulling their money out. And that's ultimately what I think I'm seeing in the trends. But okay, jumping over to IGIB, iShares Trust 5 to 10 year investment grade. We look pretty good here, actually. Next target one is 50. We've gotten a daily trigger. Our breakout is going to come in. Actually, do we have a weekly trigger? No, I have the line on the wrong side here. Can't guess where my breakout is going to be yet. So we're going to take that off. But we will get a breakout once our weekly trigger. So, 50% position size here, because we do have a daily trigger if you're not. So maybe sell 45 puts. Could also, it's pretty aggressive. You could buy January to February $50 calls and earn 20% on that if you wanted to take that direction. I wouldn't be opposed to that with my thinking in that 6 weeks box. I'm just trying to stay very focused with the limited time we're going to have between now and the end of the year as far as trading and putting positions on with the holidays and whatnot. So, but that's what I have for today, folks. Great trading. Until next time.